How many tech startups have the ability to raise from private equity? Only the largest of the tech startups. You don't have VC helping out these startups. We're here to help the founders. It's a load of baloney. The opportunity are for the traditional incumbents that are in a battle against the tech monopolies. I think this is one of the best opportunities right now for how tech startups can bridge these difficult times. I actually have a gripe with how venture capital has been handling the pandemic. When Sequoia first issued that letter in early March saying, this is the black swan of the next 10 years, coronavirus is here, you need to take drastic action, I criticized that letter because it was all doom and gloom. Where was the support from Sequoia to say, we believe in you, where we, Sequoia, are going to try to either raise additional funds or reallocate part of our funds to support you with either debt or convertible notes or just creative financing options to help our portfolios get through this. So I think there's been a huge lack of leadership from the VC community. Basically, the whole VC community is on pause, and their excuse is that they are reassessing strategy. That just means we're not doing anything until we see where the dust settles and we see where valuations settle and we see what the lasting impacts of the coronavirus are going to be. Not a very kind of, progressive statement for the industry that's supposed to support riskier, more innovative businesses, right? You'd think they'd be trying to be at the forefront of figuring out how to support these really great companies. I know multiple platform startups that were at break even or close to break even 6 weeks ago. And now they only have a few months of runway. I mean, it is a travesty what's happening to very strong, fundamentally strong businesses that, are in the hospitality or certain sectors of the market that have a, 80% drop off in revenue. How do you plan for that? It's very difficult. It's basically near impossible. So anyway, I have a gripe with VCs and how they're handling this, but that presents an opportunity. As we're seeing with Airbnb, is it's presenting an opportunity for private equity. I've spoken already on the show weeks ago about how private equity has a war chest of trillions of dollars that they're going to be able to deploy and get great deals. This Airbnb deal, they took a discount to their last valuation, which was from 2017, by the way. 2017. You had the rest of 2017, you had 2018, you had 2019 with amazing growth numbers for Airbnb, and they're taking a discount. That's Airbnb, a multi-billion-dollar company that probably should have gone public in retrospect. Very strong company. Airbnb, I'll give them props, by the way, is also paying out $250 million to help ease the pain of their producers who are having cancellations. So that's good by them. They probably knew this $1 billion was coming. They announced this 8 days ago. So I don't know if they would have done that if they didn't think they had another $1 billion on the way. But still, very difficult for tech platform businesses that are not at break even. Airbnb is not at break even to be actually doling out, this kind of support in these difficult times. So tech businesses, tech startups have a very tough time to find liquidity. Now, the ironies continue. There's this article. I don't even know why these articles get written. Should tech startups apply for emergency loans? Confusion, division, reign. Okay, this is a real article in a real publication. Don't be surprised from what I'm about to read to you. The venture capital community remains divided over whether VC-backed startups should even apply for the loans in the first place, seeing them as intended to save Main Street businesses, not privileged tech workers. Who writes this stuff? This is supposed to be a tech-friendly publication. These tech startups are in dire straits. They aren't profitable, and all their fundraising prospects just dried up overnight because the VCs have gone on hiatus. And so this article is seriously saying that, and you even have this guy, Joe Lonsdale. I like this guy. I don't know what he's on right now, but controversial opinion, most of my sector doesn't need these government loans. This guy has founded multiple tech businesses. He's a partner at this 8 VC firm. Look at this. Good companies with PE VC backing can find capital to keep going even now. It's more important to get SMBs money and dollars to hourly workers. I would 1,000% disagree with you, Joe. You don't have VC helping out these startups. You have VC. I haven't seen any news from 8VC, your VC firm, to announce a venture debt fund or bridge financing for these VC firms. Airbnb is raising from private equity, not VC. How many tech startups have the ability to raise from private equity? Only the largest of the tech startups. So tech startups are in a very difficult time. VCs aren't funding, despite what Joe is proclaiming here. And they don't have, and banks aren't lending. No way are banks lending right now, especially to unprofitable tech startups. And their only option is these programs like PPP. So absolutely, they should be applying for these. The tech community is a very important part of our economy. And as I was mentioning, you have very strong businesses that were at or very close to break even pre-coronavirus that now, because their revenue has fallen off of a cliff, they only have a few months of runway. What are they supposed to do? And their VCs are not stepping up to the plate. So it's a huge travesty what the VC community is not doing in a time of crisis. And I think there's a lot of VC firms out there that, say, oh, we are founder friendly. We're here to help the founders. It's a load of baloney. If that was true, you would see a very different response from the VC community right now. There are a myriad of articles showing the power shifting from startups to VCs. And I think the VCs are kind of enjoying having all this power. So what is the opportunity here? The opportunity are for the large incumbents, the traditional incumbents that are in a battle against the tech monopolies to help with these tech startups. These large incumbents, they know that they need to embrace new platform, marketplace-driven business models. And right now, there's a very unique opportunity to provide, say, for example, very short-term debt tranches or bridge loans to tech businesses, platform businesses that have a strong business model, that maybe had strong traction before coronavirus. Eventually, things are going to bounce back. And this window of opportunity is not going to be around forever. And so there are many tech startups that need a bridge loan. They need some debt financing in the short term. Banks aren't giving it. VCs aren't giving it. They're not big enough to go to private equity. The tech monopolies want to see them fail, so they can either just acqui-hire the people or just buy the IP at a fire sale. The tech monopolies want these tech startups to fail, so they can just kind of take the leftovers for themselves. And so, who else do the tech startups have to help them? The traditional incumbents, oddly enough. And so, I actually know many CEOs. These are strong CEOs, visionary CEOs that their core business is not having an easy time. But they know that eventually the economy is going to bounce back. Eventually, we're going to get through this. And digital transformation and embracing new business models is still going to happen in their industry. And so now it's a perfect time where you can help a really good startup, provide some debt vehicles to them. And what do you get in return for that? You get warrants. And you get the ability to invest in these tech startups at a later date. Once you have more conviction, once you have maybe more time to actually have a partnership or work on some proof of concepts or do some trials with, could be multiple tech startups in a space, right? If you were to allocate a few $1 million in venture debt to a few tech startups that you probably would want to do a deal with one of them, and you get some warrants, and then you go get your conviction, you go get to work with them more closely, you see what kind of synergies they share with your core business. And then you're able to basically, for the ones that you don't invest in, you get your debt back eventually, hopefully. And for the one that you do want to invest or acquire, you now have the warrants that you can execute at a later date and still preserve a premium discount to what their last valuation was. Airbnb is taking a discount on their 2017 valuation. Then smaller tech startups, just as a rule, are going to be sharing material discounts if you can help them solve this liquidity crisis. And so I think this is one of the really only or best opportunities right now for how tech startups can bridge these difficult times outside of using these government options, PPP and the disaster relief loans and so on and so forth. But that might not be enough, or these tech startups might need to lay off still a material size or portion of their business to make it through. And it's just going to be that much harder for them to build that team up and get back to par. And so they're going to have some very difficult decisions to make over the next few months here. This isn't a quarters, this is a months type of crisis. And how can large incumbents that know that they're eventually going to need to do a deal with one of these tech startups help fill in the gap and be a hero? Because we're seeing a lack of that from the VC side, and it's honestly a huge disappointment. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.